Greetings, everybody. I hope that you guys are good. I actually just wanted us to go through EURUSD and on the 50-minute chart just to see what actually transpired today in regards to this currency pair. And what actually happened is we actually saw the market, or rather the London session, open. And as soon as London opened, we actually saw the market move that down to around this level. Why did the market move to that level? The reason why the market moved to that level, in my very, very humble opinion, is because we had previously had this very nice W structure, and you guys know that whenever it comes to these W structures, what normally happens is that a lot of traders and investors usually buy on the second leg of that W structure and they place their stop losses below. So we had a lot of stop losses located in and around this region, hence we saw the market the next day coming down to grab those stop losses rather. So what happened next? What happened next was that we actually saw the market move that down. In my very, very humble opinion, I believe that actually in hindsight, right? In hindsight, we should have bought at this point, right? We should have bought at that point, but unfortunately myself, I was not able to buy because I actually had other trades running when this move was happening, and so luckily I was not able to buy. But had you bought at this point, I believe that your analysis was correct, and that is because we are actually anticipating a move upwards, right? But as we can see in hindsight, the move did not really materialize, and we saw the market actually continue to move down rather. The reason why I believe that the market moved further down is because at this level, those who control the markets did not have the right contracts, the right number of contracts, hence they pushed the market further down by a few candlesticks, right? And then at that point again, we saw the market giving us a very nice W structure, and I believe that at this point as well, we should have entered at that leg, as the anticipation was for the market to continue to move further up, right? So myself personally, I actually saw this move. However, I did not enter here, and the reason why I did not enter is because I know that we are in earnings season, and I was anticipating that a few companies would release some of their earnings in and around the second leg of this W structure was presenting itself, right? So I thought it would be best for myself to actually wait for the New York session to start, and then I would look for my entries, right? So during the New York session, we actually saw the market, right, opening and then giving us this very nice W structure, and I entered at that point. That's where I entered, and in my very humble opinion, it was a risk-free trade. It was a 99.9% risk-free trade. The reason I say so is because remember, guys, we had this point where the market stop hunted, and that failed, right? Price or the market tried again to stop hunt to this level, right? And had you entered here, you would have gotten it wrong, right? And then it came again for the third time to this level, and it gave us another W structure. This, in my very humble opinion, was a risk-free trade, and that's how I entered this trade over here, right? Now, the anticipation, or my anticipation, is for the market to move further up to around this level, which is a very strong level of resistance, as you guys can see, as we had multiple rejections in around that area, and in the future we may get another rejection at that point, right? But my issue is, if you were to go to the H4 chart, you would see that we actually have a candlestick that looks like this. If I can just draw it, right? And it's a bearish candlestick. So what this means is that this is a liquidity candlestick, and it is carrying a lot of money at the bottom. And as much as I'm saying that I expect the market to continue to move up, what may possibly also happen is that we may see a situation where the market moves further down again to grab that liquidity over here, and then moves further up. And also remember, because we have this W structure over here, and remember what I said earlier, guys, a lot of people actually bought at this point, and that is because whenever we have these W structures, a lot of people do buy at that point and they place their stop losses below. So there is at this point plenty of scope for the market to actually do this, to grab all of those liquidity points and stop losses, and then only move up and give us this very nice W structure. I hope you guys can see that. Anyway, I just wanted to show you guys how I actually entered this trade. Today I entered because it was a risk-free trade, and the market had given me a very nice W structure over here, and in my very, very humble opinion, this was a 99.9999% risk-free trade, in my very humble opinion. There is no such thing as 100%, but you get my drift. And that's it, and peace out, guys.